Hashtag the future of central bank digital currencies. Hashtag BlockVault Daily. Hashtag Hook. Over 130 countries, representing more than 98% of global GDP, are actively developing a central bank digital currency right now. But here is the part that will stop you cold. Several of these systems are already being designed with the ability to expire your money, restrict what you can spend it on, and track every single transaction you ever make. This is not a conspiracy theory. This is official government policy being debated in parliaments and central banks across the planet today. Hashtag tease. In the next 10 minutes, you are going to understand exactly what CBDCs are, why every major government on earth is racing to build one, and what that means for your financial freedom. We will walk through the history, the technology, the geopolitical battle happening right now, and the one massive contradiction at the heart of this entire movement, the fact that the technology designed to modernize money could simultaneously become the most powerful financial surveillance tool ever created. Stay with us, because this one genuinely matters. Hashtag background. To understand where CBDCs are going, you need to understand where money has already been. For most of human history, currency was a physical thing: gold, silver, coin, paper. Its value came from scarcity and physical possession. If you held it, you owned it. No intermediary required. That changed slowly through the 20th century as banking became more digital, but the fundamental architecture remained the same. Your digital bank balance is still just a record, a promise from a commercial bank that your money exists. Central banks, the institutions that sit above commercial banks and control monetary policy, have always issued physical cash. The Bank of England, the Federal Reserve, the European Central Bank, these institutions print notes and mint coins. But cash usage has been collapsing for a decade. In Sweden, cash transactions now account for less than 9% of all payments. In the United Kingdom, that figure dropped below 20% for the first time in 2022. The infrastructure of physical money is becoming expensive to maintain for a society that barely uses it. Enter the CBDC. A central bank digital currency is exactly what it sounds like: digital money issued directly by a central bank. Not by a commercial bank. Not by a tech company. By the government itself. No middleman. The balance in your digital wallet would be a direct liability of the central bank, the same way a banknote in your pocket is today. This sounds straightforward. But the implications are anything but. Hashtag main content. The first thing you need to know is that CBDCs are not all the same. There are two fundamental designs. The first is a retail CBDC, money issued directly to citizens and businesses. You download a government wallet, your paycheck lands there, you spend directly. The second is a wholesale CBDC, digital currency used only between banks and financial institutions for interbank settlement. Most of the public debate focuses on retail CBDCs, because that is where the real disruption happens. China launched the most advanced retail CBDC in any major economy, the digital yuan, officially called the ECNY. As of 2024, it has been piloted in over 24 cities, processed hundreds of billions of yuan in transactions, and is being integrated into wages, subsidies, and even government payments at the municipal level. China has also done something that made international observers pay very close attention. They tested a feature where digital yuan issued as stimulus payments came with an expiry date. Spend it within a certain window, or lose it. The goal was to force economic activity. The implication was something else entirely: money that the government can make disappear. But here is what nobody talks about when they cite the China example. The United States, Europe, and the United Kingdom are all exploring very similar programmability features, just with different political framing around them. The European Central Bank published research explicitly discussing programmable payments as a feature of the digital euro. The Bank of England has consulted on offline functionality, privacy tiers, and spending limits. These are not fringe proposals. They are in the official documentation. The Bahamas launched the world's first live retail CBDC, the Sand Dollar, in 2020. Nigeria followed with the e-Naira in 2021. Jamaica launched JamDX in 2022. Across the Caribbean and sub-Saharan Africa, CBDCs have moved from white paper to wallet. The common justification is financial inclusion, bringing in banked populations into the formal financial system using mobile infrastructure that already exists. It is a genuinely compelling argument in regions where over 40% of adults have no bank account but carry a smartphone. Hashtag deep dive. Now we get to the layer that most mainstream coverage completely skips. The programmability question. Traditional money is neutral. A dollar in your pocket does not know whether you are spending it on groceries, gambling, or charity. A programmable CBDC can know all of that, and more importantly, it can be designed to restrict or enable spending based on rules set by whoever controls the code. Consider what that actually means in practice. A government could issue welfare payments that are only spendable on approved categories of goods. Stimulus money that cannot be saved, only spent. Tax refunds that expire in 60 days. Carbon credit integrations that limit purchases of high-emission products. Every single one of these examples has appeared in official research papers from legitimate monetary institutions. This is not speculation. These are features being seriously evaluated. Here is the critical question that nobody in the mainstream is asking loudly enough: who sets the rules? In a democracy, presumably there are legislative guardrails. But technology architectures have a way of outlasting political administrations. The infrastructure you build in one political climate gets inherited by the next. A programmable money system designed for benign purposes today is programmable for any purpose tomorrow. The privacy dimension adds another layer of complexity. Cash is anonymous. Commercial bank transactions are logged but accessed only through legal process. A retail CBDC sitting on central bank infrastructure creates a direct ledger connection between every citizen's spending and the state itself. Even systems that promise privacy tiers, where small transactions are anonymized and large ones are visible, still represent a fundamentally different relationship between individuals and their money than anything that has existed before. This is exactly where Bitcoin and decentralized crypto assets enter the conversation in a new way. One of the original arguments for Bitcoin was censorship resistance, money that no single entity could freeze, program, or restrict. As CBDCs advance, that property is becoming less theoretical and more urgently practical for a growing number of people. The contrast could not be starker. Bitcoin has a fixed supply, no issuer, and no programmability constraints. A CBDC has an elastic supply, a government issuer, and theoretically unlimited programmability. These are not competing payment systems. They represent two completely different philosophies about what money fundamentally is. Hashtag analysis. The geopolitical dimension of CBDCs may ultimately be the most consequential. The SWIFT financial messaging system has functioned as the backbone of international dollar transactions for decades. When the United States and European Union cut Russia off from SWIFT in 2022, it demonstrated in real time how financial infrastructure is a geopolitical weapon. China's CBDC strategy is explicitly designed to reduce dependence on dollar-denominated settlement systems. Project mBridge, a cross-border CBDC settlement platform developed by central banks of China, UAE, Hong Kong, and Thailand, successfully completed pilot transactions in 2022 and 2024. It represents a parallel financial architecture that bypasses Western-controlled systems entirely. For the United States, this creates a genuine dilemma. Moving slowly on a digital dollar risks ceding ground to yuan-based settlement systems over the next decade. Moving quickly risks domestic political opposition. A digital dollar has already generated significant pushback in the U.S. Congress, with legislation introduced specifically to prohibit a retail CBDC on civil liberties grounds. The Federal Reserve itself has been cautious, repeatedly stating that it would not proceed without clear authorization from Congress. That standoff continues today. The Bank for International Settlements, which functions as the central bank of central banks, has been coordinating research across over 60 institutions. Their work on Project Agora, announced in 2024, brings together 7 central banks to explore tokenized commercial bank deposits integrated with wholesale CBDC infrastructure. This is the quiet, less visible layer of the transformation, the plumbing of global finance being gradually rebuilt in digital form, largely out of public view. Hashtag conclusion. Here is what you should take away from everything covered today. CBDCs are not a distant future scenario. They are an active, accelerating present reality. The technology works. The pilots have run. The architecture decisions being made right now will determine the financial landscape for the next 50 years. The central tension is not whether digital money will exist, it will. The tension is between the efficiency and inclusion benefits that genuine digital currency offers, and the surveillance and control risks that programmable state-issued money introduces. That trade-off deserves serious public debate, and most people are not even aware the conversation is happening. Understanding this is not optional anymore. Your money, your privacy, and your economic autonomy are all directly in the frame. Cryptocurrency investments are highly volatile. This video is for educational purposes only. Never invest more than you can afford to lose. ## CTA. Before you go, if this video opened your eyes, hit that like button right now. And subscribe to BlockVault Daily, we post every single day. Check out this video next, it goes even deeper on this topic. See you there.